Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Wednesday, July 9th, 2014, and now you're looking at an intraday or 10-minute chart of the SPDR or SPY. The reason I wanted to bring this up is because I want to point out that the same exact chart patterns that we talk about that play out on a daily basis or weekly basis also play out intraday, which is just fine for day trading. But each of these chart patterns that we discuss on a daily basis, it's no different whether it's on a 10-minute basis, and each one of these bars is 10-minute long, and it's an hourly basis or a daily basis. It doesn't matter. So let me point out something, and then we can see tomorrow how it plays out. So here you had a gap up at the open, okay? And you came down. This is a inside consolidation pattern, okay? Sideways to down consolidation pattern, right? We never took out the low, and then we made it back up. Here's 3-bar surge, okay? We've heard that before, okay? And then we floated sideways. This is sideways to down. This is, again, a bullish pattern, okay? We started back up. We took a dip right in front of the Fed minutes, right? Or right at the Fed minutes, which is typical for today. We had the Fed released their minutes, which is really just a document of what they want you to think happened or what they said. It's not really what was discussed, but that's a discussion for another time. So you get a lot of this whipsaw action in the market around 2 o'clock when the Fed releases the minutes. So the market goes down, then it shoots back up. Oh no, everything's fine. The Fed's going to support the market, whatever everybody wants to believe. And then we go sideways. And this is what I want to point out. This is what? A bullish pattern. Okay, so if this is a bullish pattern, okay, where are we likely headed early tomorrow? Higher. Where did we come into today? We came into this resistance point here from this is a gap window, right? So this was a lot of resistance, okay? Now the market may want to fill the gap and come up into this area where there's a lot of other resistance in here, okay? So if we fill the gap at about 197.40, 197.42, 197.45, okay? If that happens early tomorrow and the market fails, meaning we go back down, okay? This is what it looks like on an hourly chart. Okay, now look at this. Here's your down move from Monday, Tuesday, okay? Your rebound today, this is a bearish pattern, right? This is a wedge pattern or inside bar pattern. It's a rising wedge pattern. It's a bearish pattern, any way you want to slice it. Okay, so we're into this gap window. If we fill this gap and come into this resistance point and we aren't able to move any higher, then guess what? The market will go down, okay? And we will go down tomorrow, and first we will test this double bottom low, and then we might come into some of these other support areas, namely here this 20-period moving average, which is on the hourly basis, so it's the 20-hourly moving average. Okay, so that's a likely scenario for tomorrow. However, if the market goes up tomorrow and we open up in this area, okay, we could certainly go and test this double top here, okay, which is the high at 198 and a quarter and change in that neighborhood. Okay, so that's what I see in the cards for tomorrow, and I still think for another week or so, maybe week or two, we're going to see some choppy action, but I think we'll see a grind higher in the market. And, that's what I suspect until the cycle turn date that I have coming up later in the month. Now, one thing to note is if you look at the NASDAQ market, it wasn't quite as strong. The pattern looks the same, but go over to the daily basis, okay? And we got halfway up that red bar, maybe a little more. Let's see what the daily basis looks like in the SPDR. Yeah, all right. So the SPDR was a little stronger today, but the NASDAQ was a little weaker. Let's take a look at the IWM, which is the small cap Russell 2000 index, and look at that one. Now, I said yesterday, and I've been saying that this is the market leader. Okay, so it was the market leader on the way up, the market leader on the way down, and what happened today? Nothing. Okay, the IWM was a nothing day. Okay, We basically opened up at 116.67 and we closed at 116.56. So all in all, that's a nothing flat day. Okay, so now check this out. If for a week to 10 days, trading days that is, 5 to 10 trading days, all right, if we make a sideways wedge pattern or inside pattern, okay, a bearish wedge, okay, this is going to be a really nice shortable trade to take place. We would look to get in about here, 118.5 in that neighborhood, and take it for a nice ride down here to double bottom. That would be a good trade setup. So I've got my eye on that one. Let's go over to the gold market. Okay, this is the GLD. And the GLD basically is holding up, wants to go higher. What we wanted to do is we wanted to move sideways like this, okay, for another couple of weeks or so. And the longer it goes in this type of pattern, the higher it's going to go when it starts to ascend. And what happens is, I'm going to give you some levels that we're going to look out for later if this plays out. If the pattern plays out the way we need it to, if it goes higher now, okay, you're going to probably top out in this area about 133, okay, in the GLD. But if we go sideways for another couple of weeks, okay, we're going to get up into this 145, maybe 147, 148 area, maybe even test this 150, 152, 153, that neighborhood here where all this sideways pattern, this is going to be a lot of resistance, okay, a lot of sellers in here, or excuse me, a lot of buyers in here that got hammered on the way down. They're going to be sellers if we get back up in this area here. Nevertheless, if we go sideways out to here, all right, well, not that far. If we go sideways out to here, you know, through maybe the end of the month, then I would look for the 145 to 150 area. If not, if we start higher now, I think we're going to top out at 133. So that's my story on gold. I'm not a buyer yet. I'm going to give it some time, okay, because I still think that we could make another low before we move higher. So that's what my numbers are telling me. So I go with my probabilities, and we'll let you know if the pattern starts to develop in our favor. We'll take the trade. GDX, we might as well look at that since we're talking about gold. Same thing. GDX is very, very strong. Okay, I've got 38 in my sights on GDX, but I don't want it to go higher now because I think it'll stall out in this $30 area. I want it to go sideways. I want it to stay above these moving averages. And if we can get some movement like this, okay, for another couple of weeks, be all over it. It's an inverse head and shoulders pattern. It triggered last week. Okay, we're staying above the neckline, which is in here. Maybe I can draw it in real quick for you. Let's see if we can do it. It's not going to be exact, but it's going to be pretty good. Let's see. Yeah. That's not exact. It's a little bit lower than I would have liked to draw it. However, it accentuates the point that we've triggered, and this, as long as it stays above this neckline, is going to go higher. So what happens is, if you want to take this trade now, I'm going to wait a little bit. I'm going to wait to see if we can get a better price and see if we can get more confirmation that I'm right and that it's going to go a lot higher. Okay, but if you want to take the trade, you just put a stop out on a weekly basis below this line here, and that'll be a good risk reward trade. All right, so that about covers GDX. Interest rates today. Interest rates got, let's see, they got a little whippy around the Fed announcement. Well, there you go. Fed announcement, 2 o'clock. Rates go down. Okay, they're going to support the market. They're going to keep liquefying the market, all that stuff, pumping money. It's just the rumor of the day. It's the interpretation of the day. It doesn't really matter what the Fed minutes said. It matters what the market says. It matters what the chart patterns say. And on a daily basis, okay, not much has changed. We're still in a uptrend as far as I'm concerned in interest rates, and until the chart tells us differently, until we take out this low here, which I don't think we will, I'm going to stay with the TBT trade, which is based more so on the longer bond. This is the 30-year This is the 30-year interest rate. Same routine. Okay, I don't even think we take out this number here, but I certainly don't think we're going to take this out. And if we look farther out and we look out on a weekly basis, okay, I think this is a bottom. Okay, I think this was support. I think this is a bottom, and I think we move higher. And once we get above this moving average here and this 200 period moving average here, I think it's off to the races. I think we go a lot higher, and I think we go to 4%, and then we'll keep going. So that's why I'm staying with the TBT trade. I'm not going to be out of the TBT trade until the market tells me to stop out of the TBT trade. And what that's going to probably take is a breach of this low here, which the closing low is 331 on a weekly basis. So until we close below 331 on a weekly basis on the 30-year interest rate, I'm most likely going to stay with the TBT trade. I think there's much higher prices ahead. Let's see what else we've got in the cards. We talked about the market. We talked about gold. How about oil? Oil came down again today. This is a weekly chart. Let's go over to the daily chart. All right. Oil came down again today, and it basically came through your 50-day moving average or 50-period moving average. And here we're going to challenge this low here. Tomorrow, if we challenge this low here, okay, on Thursday, and the low would be 37.21, and 37.21 is defended, you could probably look for higher prices for at least 5 to 7 trading sessions in USO. So that would be a trade I'm looking at for tomorrow. If we take a dip early in the morning, if we do one of these gap downs in USO, probably going to pick up that trade, and I'll let the members know with a trade alert if that happens. We're going to play for a multi-day bounce there. So that's on my radar screen. And that's about the round robin on the radar screen. So I'm going to call that a wrap for today. This is David Frost, mystrategicforecast.com. Thanks for tuning in. We'll see you on the charts.